IAS 37 requires us to create a provision when the cash outflow is probable. Probable means more likely than not, so the chance is over 50%. But in SBR, we need to be able to justify our point. And quite often the scenario is going to be like, you know what, the directors have read some of the standard, just a few pages of it, and they are sure that this is how it's supposed to be accounted for. Explain why they are not right. So you need to be able to explain why in certain cases when something looks like a provision, it is actually not a provision. And you can't just say, because. You need to provide explanation. Let's start with IFRS 15. When we expect sales return, so you sell something to your clients and they have the right to return something within, let's say, 14 days. Can you recognize revenue in full amount? No, you cannot, because you will need to find the percentage of clients that would be expected to return you the goods, and you are going to use historical information for that. And for that amount, you are going to create a refund liability, a contract liability under IFRS 15. Why not IAS 37? Because that is a broad standard, and IFRS 15 overrides the rules, the provisions of IAS 37. We also have some extended warranties. Not those warranties that means that we have to pay, we have to repair if something goes wrong, but when the client can pay us more money, and we are going to take the risk not for a year as we are required, let's say by law or by our policy, but let's say for 2 or 3 years. In this very case, this extended warranty is going to be treated as a separate performance obligation. So this means that we're going to defer revenue, we are going to record the cash that we received as contract liability and not as a provision. Why? Because again, IFRS 15 is more important than IAS 37. Let's think about non-refundable sign-ups or like invitation fees. So we might owe services later, and if they have signed up, and we're going to recognize it as contract liability. Why? Well, because when they sign up for our product and they cannot cancel, well, they may ask us to provide them some services. So we will have to defer the revenue up until we satisfied the obligation. That was IFRS 15 that actually overrides the principles in IAS 37. Similarly, we are going to have IFRS 16 overriding IAS 37 requirements. So when there are onerous leases, on a normal day, if we have an onerous contract, so the contract, the cost of executing which are going to exceed the benefit, we will have to recognize that provision. But SBR also tests what is going to happen if you have onerous lease. So, for example, you discontinued this very type of product, but you still have to pay for the asset, for the property, plant, equipment. In this very case, we are going to recognize the impairment of the right of use asset. The lease liability will stay the same because lease liability is based on whatever we are going to pay to the lessor. But the asset is not going to bring us as many benefits as we expected. And because it has happened and we do know it already, we cannot recognize IAS 37 provision. Instead, the other side of the story, so credit, right of use asset, debit, will go to P&L. Now, Future operating losses. Well, that is something that you probably know because you can technically discontinue the operations. You don't recognize the provision because this is not something that is unavoidable. It's not your obligation. But we will need to consider the impairment of assets. We are going to not apply IAS 37 for IAS 16, property, plant, equipment, when we have maintenances, overhauls, or the change in major components. I would remind you, if you have an airplane and this airplane needs to go through some sort of licensing every 5 years, that's not a provision. You just take the airplane, you estimate the cost of this licensing, you deduct it from the cost of airplane, and you treat those as two separate assets, depreciating them over each and every one's individual useful life. Why? Well, because there is no obligating event test. Because at any point of time, you're going to say, 5 years have passed, I don't want to operate this plane anymore, and you will not have to pay for the license. And of course we are going to do that, right? We're not going to abandon the plane just because we don't want to pay the license, but that is just the criticism of the standard. The application is that this is a separate part of asset. So, these are a few examples that we have in SBR exam where our other standards are going to override the principles of IAS 37, and as such, the credit won't go to provisions, but would go to other accounts. And hope that was useful. Consider subscribing and please share this podcast with your friends so that more and more people would find it easier to get ready for SBR. This was Lilia Kirilenko, and I will see you next.